Welcome in. Today we're diving deep into a hard truth that's reshaping restaurants in 2026. Great sales alone no longer guarantee survival. Economic analysts are calling it a permanent structural margin reset. Fancy words for a brutal reality where food costs won't stop climbing, supply chains are chaos, and labor wages are skyrocketing. You've probably felt it, that squeeze that gets tighter every single month. About 45% of restaurant operators are either losing money or just barely breaking even. So the real story is not top line revenue. It is prime cost, the combined force of your product cost and your labor cost. And it has become the clearest indicator of whether a restaurant is healthy or heading towards serious trouble. In the next few minutes, you're going to discover why mastering this one number isn't just important. It's literally a matter of survival. So, what exactly is prime cost, and why does it matter so much right now? At its core, prime cost is simple. It's the total sum of your cost of goods sold and your total gross labor expenses. COGS covers every ingredient, every beverage input, every paper good, every branded takeout container, and napkin. Labor means the fully loaded cost: wages, salaries, overtime, payroll taxes, benefits, workers' comp, and PTO. Add those two pillars together, divide by your gross sales excluding tax, and you have your prime cost percentage. Revenue is vanity, but profit is sanity. And in 2026, that isn't just a cute phrase. It is the difference between staying open and shutting down. At the very center of this financial reality, prime cost is your most important controllable metric. And that raises the next critical question. If this metric is so powerful, why are so many restaurants still struggling to control it? Here's where most restaurants are getting killed. They're still relying on old school monthly profit and loss statements. Think about it. By the time you get your February numbers, you're already halfway through March. A month-end P&L is really just an autopsy. It tells you what went wrong after you've already bled out. Those invoices take weeks to process, so you're looking at data that's up to 45 days old. By the time you realize your seafood costs spiked or your labor schedule was a disaster, that money is permanently gone. You can't fix dead profit. And the problem goes even deeper. Many teams calculate prime cost inaccurately to begin with. They leave out packaging from COGS, ignore the full labor burden beyond wages, or divide by the wrong sales number. So the problem is not just slow reporting. It's incomplete visibility. This reactive, delayed approach is a guaranteed path to failure. And once you see that flaw clearly, the solution starts to make perfect sense. So what's the solution? It's what I call the Monday morning revolution. Instead of waiting for month-end autopsies, you start tracking your prime cost every single week and push that data right onto the kitchen floor, out of the back office, and into the hands of the people who can actually act on it. Picture this. Every Sunday night, your closing manager logs the week's sales and labor hours. Monday morning, the whole team huddles around the numbers. You run a simple color-coded system. Green means you're on track. Orange means investigate portion errors or waste. Red means stop everything and fix it now, like cutting that overtime. When you post these weekly numbers where every staff member can see them, you transform abstract margin goals into visible daily behavioral expectations. Suddenly, everyone becomes a financial steward, not just the accountant buried in the back office. This structured weekly tracking ritual, paired with exact concept-specific benchmarks, is the core methodology that changes everything. Now let's get concrete, because the math here will make your jaw drop. First, the benchmarks. Quick service restaurants should target a prime cost of 55 to 60%. Fast casual sits at 58 to 62%. Full service and fine dining operate between 60 and 65%. These are your 2026 survival thresholds, not suggestions, absolute targets. Now, here's the 2% miracle that illustrates exactly why precision matters. Picture a restaurant doing $2 million a year in sales. If their prime cost runs just 2% over benchmark, 2 cents on every dollar, they're bleeding $40,000 straight out the door. $40,000 in pure profit gone. And for a restaurant running on a 5% net margin, that 2% overrun just slashed their profitability by 40%. Revenue is vanity, profit is sanity. In 2026, those exact benchmarks are lifesavers, and missing them even slightly can be fatal. Let me show you exactly what this looks like in the real world. A bistro was drowning. Their prime cost was sitting at 68%, way above the 60% full service benchmark. They were bleeding money and couldn't pinpoint why. After implementing the Monday morning revolution and adding basic automation tools, here's what happened. In week one, weekly reviews uncovered that kitchen staff weren't weighing proteins, just eyeballing portions. They also spotted poor seafood yield and prep waste that had been invisible before. Week two, they noticed support staff were clocking in 30 minutes early for every single shift. With weekly visibility, they fixed these issues immediately. Digital scales, portion cards, staggered start times, live labor alerts. Within 45 days, their prime cost dropped from 68% to 63%. By day 90, they hit 58%. And here's the best part. They didn't raise menu prices or sacrifice one bit of guest experience. They just stopped the leaks. On their $1.2 million operation, that 10% improvement put $120,000 back in their pocket. This isn't theory. This is real money, recovered through disciplined visibility and fast corrective action. Now, here's where things get really exciting, because we're not talking about manual spreadsheets anymore. That belongs in a museum. The restaurants winning in 2026 are using AI-powered platforms that create a seamless data flow from front of house to back of house. Imagine a system that watches your vendor prices 24 hours a day and sends an alert the moment chicken breasts jump 5%, or suggests an alternative supplier automatically. Predictive inventory that lowers your par levels when it sees a rainstorm coming Saturday because it knows foot traffic will drop. And labor? Machine learning analyzes your sales patterns, local events, and weather forecasts to build perfect schedules that match staff to demand hour by hour, with overtime warnings firing before schedules are ever posted. As minimum wages keep climbing, and they will, this technology becomes your financial shield. The gap between restaurants using these integrated systems and those still on spreadsheets is getting wider every single day, and that gap is permanent. One group is building a data-first dynasty. The other is running on instinct in an era where instinct simply isn't enough anymore. So here's the bottom line and your clear mandate. In this era of structurally higher food and labor costs, restaurants cannot rely on revenue growth alone to stay healthy. Prime cost is your true north, the one metric that determines whether you survive or become another statistic in the restaurant landscape of 2026. The practical next steps are simple but powerful. Audit your inventory logic. Make sure you're capturing everything from proteins to paper goods. Measure labor fully loaded, wages, taxes, benefits, overtime, all of it. Switch from monthly reviews to weekly prime cost diagnostics. Launch that Monday morning huddle and post performance numbers where your entire team can see them. And if you're still on manual spreadsheets, stop everything and get your POS, payroll, inventory, and scheduling software connected. It is no longer optional, it is mandatory infrastructure. The operators who embrace this discipline are not just surviving margin pressure. They are building stronger, more scalable businesses because of it. If there is one idea to take with you, it is this: protect the margin, and you protect the future. Like and subscribe for more helpful videos like this. Connect with Forks for the experienced accounting professionals your restaurant needs. Details in description below.